Hello. We Indians are always conscious about paying tax on time. For paying tax on time, we must have basic knowledge about income tax. Income Tax Act 1961 consists of five heads of income: income from salaries, income from house property, profit and gains of business or profession, capital gains, income from other sources. In this series of lectures, we are going to cover only capital gains. And mostly Indians invest in real estate, either in land or buildings. Buildings include commercial buildings and also residential buildings. And capital gain is the increase in valuation of land and buildings, but only when the land and buildings are sold, the income is realized. And the tax liability also arises only when such properties are sold. So, in all our discussions, we will be confining ourselves to land and buildings only, and we are not dealing with capital gains pertaining to shares and other assets. Capital gain is the difference between the net sale consideration and indexed cost of acquisition and indexed cost of improvement. And capital gain arises only when the property is sold. And the capital gain can also arise when there is an exchange in assets. So capital gain forms an important role in the tax structure of any country, and non-resident Indians should definitely be aware of capital gains. And though there are 11 sections dealing with capital gains from 45 to 55A, it assumes great importance. So in series of lectures, we will be covering various issues starting with basics in capital gains. With this introduction, let us start our question and answer session.
Sir, with this introduction, I will be asking a few questions for you to answer to throw more detail and light in this subject. First of all, can you explain what is capital gain and how is tax payable on transfer of capital asset?
There are three elements. Number one, there should be profit or gain arising. Number two, out of sale of a capital asset. Number three, during the financial year. If there is any surplus, the surplus will be charged under the head capital gains. If there is a loss, then capital gains will be shown as minus. Then with regard to the sale consideration, net sale consideration has to be taken. From the net sale consideration, the total sum of indexed cost of acquisition and indexed cost of improvements will have to be subtracted. About this, we will see in subsequent questions.
Then, sir, you are talking about capital assets. What are capital assets?
Capital asset means property of any kind, which includes land, buildings. As I told you, buildings include commercial as well as residential buildings, patents, copyrights, vehicles, but does not include stock in trade or consumables.
What does transfer mean?
Transfer means either sale or exchange. Sale, when there is an outright sale of a property, it is called sale. When there is a joint development, it is called transfer. In respect of capital gain, the most important term is transfer, because transfer includes sale, exchange or extinguishment of rights.
Sir, does capital gain arise when an asset is inherited?
When the asset is inherited, there is no tax, but when the inherited asset is sold on a later date, capital gain will arise.
Will sale of land attract capital gain?
In the case of agricultural lands which are situated beyond a distance of 8 kilometers from the city limits, there is no capital gain. And the lands which are situated within 8 kilometers, the liability to capital gain tax arises. Moreover, capital asset definition is wider. So, if the agricultural land does not become part of capital asset, there is no question of any tax being levied on sale of such agricultural lands.
Can you now define what assets are not capital assets?
Like stock in trade, some of the securities notified by the government, like gold bonds and other bonds, any personal goods such as clothes, furniture, etc., then agricultural land, these things are not called capital assets.
How many types of capital gains are there? Can you explain?
There are two types of capital gains, long-term capital gain and short-term capital gain. Long-term capital gain is one which arises from the transfer of a long-term capital asset. Short-term capital gain is one which arises on transfer of short-term capital asset.
What is a long-term capital asset in respect of plot, land and buildings?
Prior to 1/4/2017, 36 months was taken as a period of holding in order for the asset to be classified as a long-term capital asset. That period has been reduced to now 24 months. So if the asset had been held for a period of not less than 24 months, then the asset will be classified as a long-term capital asset. And asset which is not a long-term capital asset, which has been held for less than 24 months, will be classified as a short-term capital asset.
So you were talking on indexation. Can you explain what is indexation?
Central Board of Direct Taxes, the highest body so far as income tax authorities are concerned, every year announces in the month of June or July a point called index point based on the inflation index announced by the central government. 75% of the inflation is taken as the index point, and the index point as on 1/4/2001 has been taken as 100, and for the financial year 1920 it is now 289. For the financial year running financial year 2021, it has not been announced.
Can you explain what is CII?
CII is cost inflation index that determines the value assigned for calculating long-term capital gains.
Is benefit of indexation available to short-term capital gain arising out of sale of short-term capital assets?
Indexation is available only for long-term capital assets and not for short-term capital assets. Long-term capital asset, at the cost of repetition, I would like to state that a capital asset held for not less than 24 months from the date of acquisition, and anything less than 24 months will be classified as a short-term capital asset. After a detailed introduction on capital gains and answering questions up to cost inflation index, we have come to the concluding part of this session, and more questions will be taken up starting from cost inflation index in the coming episodes.